might happen again here.
Which way did that settlement go? In favour of whom?
Undisclosed.
Funny that, isn't it?
And at an undisclosed amount. Funny that is.
Christy, thanks very much. Christy Loostout there, our tech correspondent. Time now for a short break. When we come back, China's financial markets get ready to greet a new arrival, a fund that could signal the start of a new era for the mainland's financial sector. Stay with us. Welcome back. Something of a red-letter day for China's financial markets today with the launch of the mainland's first open-end investment fund. The $600 million Huaan Innovation Fund is expected to buy a wide range of China stocks, with a large part allocated to high-tech shares. Unlike closed-end funds, an open-end fund allows investors to withdraw their capital at any time. The launch is expected to pave the way for further developments in China's volatile financial sector. Well, to talk more about the new fund and its implications for China's markets, I'm now joined in the studio by Philip Chan. Philip is Research Director at Shenwan Securities, based here in Hong Kong. Philip, good to have you back on the show.
Morning.
Fund managers in China don't enjoy the best reputation. Allegations last year that a lot of fund managers used to meet in saunas and work out how to manipulate prices. What do we know about the Huaan Fund Management Company, Philip?
No, they've got a pretty good reputation. They are being advised by an outside company, JF, which obviously got good international reputation as well. I think one thing you've got to bear in mind with a lot of the allegations made last year, it was more related to individuals rather than, say, companies. And if you're saying individuals, then that was pretty widespread. Yeah.
Now, given that Huaan is obviously is being advised outside as well, so it's got a good reputation. What is it going to bring to the market as far as making sure that accounting's done properly? What sort of regulations is it going to enforce, if you like?
Well, they've having a look at the offer documents, they're pretty much in line with, say, Western style open-end investment funds are.
Is there likely to be much of a take-up, do you think? Given that the market is down, 15% or so, 15-month lows, I should say.
Yeah,
sorry, yeah.
Sure. No, I mean, obviously markets are down. Both Shenzhen and Shanghai markets, Asia markets are down from their recent peak. But this is a longer-term plan, to institutionalize the market. There are already quite a lot of closed-end funds, right? But in the context of the size of the Asian markets, they're still pretty small. I mean, they're only taking up maybe 4 to 5% of the market cap.
The idea here really is to deepen the financial markets, isn't it?
That's right.
Now, given that fund ownership in Asia isn't a roaring success, and China particularly is seen as a bit of a speculator's market, do you think it's going to be a long time before funds catch on in China?
I don't think it'll be a long time, because even the closed-end type ones have met with some quite good success. We understand that the take-up of this new fund being launched today, or at least the interest, is pretty high, because there are a lack of investment vehicles, basically, and there are only there are only so many certain types of certain types of shares
that they can get into.
Yeah, they can get into. So lack of investment vehicles.
All right, Philip Chan, thanks very much for coming in.
Thanks.
Well, got to leave now, but just before we go, a quick recap of Wall Street's close. Bargain hunting helping to push the broader markets off 3-year lows. Blue chips not holding on to their gains, not really making much of a loss either, down 1/3 of 1 point. The Nasdaq up 7 points, that's about 0.5%. The broader S&P 500 down, up about 2/3 of 1%. Well, trading gets underway.